A lot of people wonder what the Forex market is. The Forex market is the foreign exchange market. It's where you can convert all the currencies into whatever you want. So say I was traveling to Europe from the United States, I could transfer United States dollars into euros. Now when investing comes to it, it's a little bit more complicated. Now the foreign exchange market does trillions of dollars of business a day, and is what allows people to invest in other countries' infrastructure and to allow new businesses to emerge from one country and another. These markets are mostly driven by specific groups in a decentralized version. And if you learn how to trade Forex, you can make a lot of money. Now there are several different types of brokers and several different tools that you can use to help your trading. And if you're interested in those things, I suggest that you subscribe and like my channel and like this video. I will be coming out with a lot of videos about reviews of different services and different brokers. And if you're interested in finding deals and finding brokers related to the Forex market, stock market, and other options trading, I suggest that you check out the description of this video. And like I said, subscribe to the channel. Thank you. Now there are 180 different currencies that are used around the world. It's kind of mind-blowing the number that there is. Now, if you're learning how to trade Forex, you're not going to need to know all 180 of these to do well. But it's good to understand the scope of what you're getting into, to better understand how the market is driven. Now, out of those 180 currencies, there's 8 major currencies that take almost all of the financing from the foreign exchange market. These are the ones that are traded on the daily in high amounts. The US dollar is the #1 traded currency as the world's reserve currency. There's only 8 pairs that take up 72% of Forex volume, and most of them use the United States dollar in that currency pair. Now currencies are traded in pairs. It's a ratio that determines the value of one currency to the next. This fluctuates by the minute for when the Forex market is open. And this is where people can make their money. Now sometimes people trade on smaller time frames and some people trade on larger time frames. And this is really independent for each trader. Some people use different trading strategies that can take months to complete. Some people use ones that can take minutes. It really all depends on what you're looking for as a trader and what you're planning to do as an investor. Before you start trading Forex, it's important to know the time that it is open in your locality. For Eastern Time in the United States, it is open from 5 o'clock on Sunday until 5 o'clock on Friday. It does not close within that time. This is because of the multiple different exchanges around the world. The most volatile markets normally occur during the New York and London open and close. This is when the most volatile economic data releases are released. However, that doesn't mean that there are not volatile moments during the Sydney or Tokyo exchange open and close. It's important to become accustomed to the different types of volatility during different market hours. Learning how to read a chart becomes of monumental importance if you're trying to learn how to trade Forex. Currently, you're looking at the Euro USD chart. Now, when you look at this chart, you can see the price action on the left hand side. This means that €1 equals that price action on the left. Price action is one of the most important concepts within Forex. So we can see from the picture that it's ranging around 1.14, meaning that €1 equals about 1.14 USD. Now, if it is going up, oftentimes that's seen as the euro strengthening. Now, if it was going down, that would be seen as the USD strengthening. And these same concepts could be used for other charts with other currency pairs. Same concept, different pairs. Currency pairs are traded in lot sizes. A micro lot is worth 1,000, a mini lot is worth 10,000, and a standard lot is worth 100,000. This is of the native currency. So for instance, for Euro USD, a micro lot would be $1,000 United States dollars. Now if we had just turned that around and done USD over Euro instead, for example, it would be 1,000 worth of Euro. And because of that, every pip, which is the lowest denomination of movement for that currency pair, would be 10 cents worth of that base currency. Now the lots do not always actually have to be bought within those amounts. That's when another concept that is very important comes into play. Leverage is what lets you trade higher lot sizes with less currency available to trade with. So for example, you could buy a micro lot with $20 of the base currency with a 50-to-1 leverage, giving you $1,000. Now leverage availability is different depending on your location. Some areas could trade with leverage as high as 1,000, maybe possibly more in some areas. However, 1,000 is one of the most largest you will see online. However, for the United States, the maximum leverage for a Forex broker to legally offer is 50. For European nations, it's 35. Leverage helps you trade though. It helps you start off with lower amounts of money to begin trading. Otherwise, you would have to trade with just at the minimum $1,000 for a lot on most brokerages. There are nano lots, which I will talk about in another video. However, you will not very often see nano lots, and normally micro lot will be the lowest one you'll see. But this allows you to make a trade for only $20. It's also important to become accustomed to the terminology used within options trading. Now there are three types of markets: a bull market, a bear market, and a sideways trending market. A bull market means the market's going up, a bear market means a market's going down, and a sideways market means that it's trending within a zone where it's jumping between a support and resistance line instead of going for a straight upwards trend or downwards trend. It's important to know the different types of trading that you can have within those types of markets. Another important concept to know is technical analysis. Technical analysis allows you to determine resistance and support levels and trend lines. This can be done through a variety of technical indicators or using predetermined price action areas that have been used for reversals in the past. A lot of this comes down to the market psychology at the time of the trades. It's important to understand how candlesticks work if you're going to trade Forex. A green candlestick means that it's going up. A red candlestick means that it's going down. The candlesticks are shown by the time frame that you choose for the chart. A lot of charting software offers to let you choose your own time frames, but a lot of them also come with pre-custom time frames such as 5 minutes, 10 minutes, 15 minutes, 30 minutes, to days, weeks, months, and it allows you to get a general understanding of how the market moves within different time frames. Now, a high means the highest it went within that time frame before reaching a close, and the low means the lowest it reached in that time frame before reaching a close. These are very important concepts to understand. To make the most amount of money you can when investing in Forex, you have to find the underlying trend. You really want to get at the bottom of an uptrend or the top of a downtrend and sell before the reversal or shortly thereafter to minimize losses. This allows you to make the most amount of money possible. It's also important to understand the different technical indicators that you may use. Some of them are a measurement of trends, momentum, volatility, or volume. Volume is also another important concept to understand when trading Forex. Volume is the amount that is traded within that time frame given. Now, technical indicators, all they do is they change the way of the data that you're looking at and the way it's presented to you. It does not change the data itself, but more just changes the way that you are viewing it. This helps you find different patterns within the data. While technical analysis is important, and some people actually only trade on technical analysis, to be a fully rounded trader, you also need to understand the fundamental analysis side of it as well. The fundamental analysis side is a side that is dictated by news and events that circumvent different currencies. These can be found on economic calendars. All these new events have different levels of volatility. Most economic calendars allow you to sort through this. Now, sometimes the market actually moves in different ways than you would have predetermined based upon the actual details within these news events. Sometimes the actual levels of movement within the economic event may only show part of the story if you dive further into the actual papers within that event. Now, time is the most important thing when it comes to trading Forex. You have to give yourself time to learn these basics and to learn more advanced skills before trading. I always recommend trading demo before trading live. This will help you get a better understanding before actually risking real money. Most traders actually inevitably fail. However, there are a few that can make considerable profits. It all is a measure of how much time and patience you're willing to take into learning this as a skill, to making sure that you end profitably instead of losing money. I hope this video helped you, and I hope that you leave some comments, and if you do, I will try to get back to you as soon as possible and answer your questions and possibly make videos upon what you have to say about this video. You all have a good day. Bye.